But the image that really should have shocked the Prime Minister and the Treasurer to their very cause this week is this one. Donald Trump in the Oval Office with the chief executives of Australia's two biggest mining companies, BHP's Mike Henry and Rio Tinto's Jakob Stausholm. All of them together pushing for the development of what could be America's biggest copper project, Resolution, in Arizona. Imagine this, our biggest companies being courted by the US president to spend their money in America in preference to doing it right here in Australia. Well, this week I did speak with BHP's Mike Henry, and I just asked him the background of that meeting with Trump, a meeting that so far, remember, has eluded our Prime Minister.
Well, so together with my counterpart at Rio, we were in there really expressing our commitment to progressing the Resolution project. And this is one of the biggest undeveloped copper deposits in the U.S. And of course, copper is a critically important commodity for every walk of life. So the U.S. government, with the support of President Trump and Secretary Burgum, is really focused on getting mining up and going and processing going in the U.S. And their support for the mining sector and for this project specifically has been very much appreciated. And we wanted to ensure that they understand just how committed ourselves and Rio are to continuing to progress this project.
But clearly the President did want to see, though, to send a message out, because this particular project, it's been contentious with local Apache groups and with environmental groups. So the President was obviously sending a message out to some of those groups and probably the US courts as well, do you think?
Look, I think what we're seeing here is a very fundamental support for reindustrialization of the U.S. and for getting mining and critical mineral supply chains more secure by producing more of them here in the U.S. And of course, that aligns very well with this project, albeit this project was something that we've been looking or trying to progress this project now for well on 20 years, or near on 20 years. It's been held up along the way in terms of some of the permitting that needs to be put in place. We're almost there. In fact, we were expecting a key component of that called the land exchange to happen this week, but that was delayed by a little bit. But we're keen to progress, and the U.S. administration is also very supportive of mining more broadly and of this project.
But it wasn't the only bit of government business that BHP did this week. It was also a part of the Australian government's economic roundtable. Broadly, what did the company tell the Prime Minister, the Treasurer, that group of people?
So because this is earnings week, I haven't been able to participate directly. I was afforded the opportunity to engage in advance. And our message here, Ross, has been very consistent and over many years, not just in recent months. Number one, very welcome focus on the part of the federal government on productivity and economic reform more broadly to make Australia more competitive. Australia is an export-dependent nation, and as such, we have to be able to compete globally. Now, right now, we've got in Australia tax rates at the top end of the OECD. Labour productivity has been stalled now for the past decade. Permitting takes too long in Australia, and energy costs are 2 or 3 times what they are in Canada, China, Indonesia, and elsewhere, and maybe double what they are in the U.S. That doesn't help us or any other manufacturing industry in Australia compete globally. And so hopefully the reforms that come out the other end of the round table are geared towards ensuring that Australia is more competitive, and that we can secure global capital to come in and invest in Australia to ensure that the strong Australia that we have today continues to be strong and is even stronger in future.
Now, I've argued for a long time that really this roundtable should have been called a competitiveness roundtable rather than a productivity roundtable. What does Australia lose from a lack of competitiveness that you described there?
So it loses opportunity to foster new industries in Australia, of course. And one of our concerns, and that we've been speaking about for a few years now, is that over the next 20 or 30 years, there's some economic headwinds coming Australia's way. As the commodity or the mix of commodities that the world needs most continues to shift, that's going to have an impact on Australian exports. And we all need to lean in together to try to stimulate new industries, new investment opportunities and resources, but in different commodities. But we have to be able to do so in competition with other countries around the world. And one of the things that we're seeing play out currently, including here in the U.S., is that there's many countries around the world that are moving aggressively to get business going, to make their economies more attractive, to try to bring in global capital, to get investment going quickly. And in Australia, we have to, at minimum, keep pace with that, because if we don't, and we get behind the curve, then what we're going to find is that we won't be able to offset these economic headwinds, and every Australian will be poorer for that.
So in the past week, I've also spoken with Mike Worth from Chevron and with Meg O'Neill from Woodside, with Mark Vasella from BlueScope, and a number of other people as well. They're global companies that are telling me that because of energy prices, because of taxes, because of industrial relations, because of the speed of decision making of the Australian government, plus the return and the ability to get that return more quickly in other parts of the world, the US notably, it makes them allocate more capital there than to Australia. Is that the BHP experience as well?
Look, I think this is the reality that we're dealing with. And I'll use one example here. We have a large copper expansion opportunity that you'd be aware of in South Australia. And the South Australian state government has been very supportive and is working together with us to try to make sure that that investment happens. And this could lead to a doubling of production from our copper South Australia basin now. But for that to happen, and this is a really big capital investment, so huge opportunity in terms of the wealth it can generate for Australia, the jobs that it will create, but we're going to be competing against the building of smelters elsewhere that happens much more quickly, much more cheaply, where energy costs, and smelting is an energy-intensive industry, are lower elsewhere. And so we're doing everything we can to make sure that we can refine those plans to make sure that we're able to build something as cost competitively as possible, to get it done quickly. But we are then reliant upon a forward view as to what's going to be happening with energy costs. Will energy be reliable? Will it be low cost? And of course, the economic settings in Australia are going to have a big bearing on the project economics, both in terms of the cost to get it built, as well as the ongoing fiscal burden that the project carries. And that's something that we've been clear with both state and federal governments about. But this is an opportunity that we want to make happen, and we're doing everything we can to make the case to both state and federal governments as to the policy settings that we think need to be in place to stimulate this sort of investment and other similar investments.
Yeah, I spoke to the South Australian Premier Peter Malinauskas a couple of weeks ago about this, and to me, he gets it. He gets the competition thing. He gets the energy costs. But you've got competing assets in Canada for copper. We've already talked about Resolution in the United States. You've got Chilean assets as well. So the point is, if you don't go ahead with the expansion of Olympic Dam in South Australia, will it make a material difference to BHP itself?
Well, of course, every opportunity is an opportunity that we wish to pursue, but there is competition for capital, and that's both within BHP, but also between enterprises. And so the opportunity at Olympic Dam, or Copper South Australia as we call that basin, is competing for capital with other opportunities in the BHP portfolio. And even if they weren't inside the BHP portfolio, the project has to be economic. It has to stand up against other copper supply opportunities around the world. And the Premier in South Australia really does get that. And like I said, the state government there has been very supportive of this project and business more broadly.
So can I go to iron ore now? Because here there's competition as well. There's more production from Vale in Brazil. There's similar news that's going to come online out of Africa. There's also increasing use of scrap. There's the maturing of China's demand as its infrastructure projects are rolling out. So there's a lot of estimates saying iron ore prices must fall from here. I just wonder whether this is a wake-up call, not just for BHP shareholders, but also for the Australian government that's relied on that iron ore price and demand being strong for a long time now.
Ross, this is such a critically important point. I mentioned earlier the economic headwinds that the nation is going to face in the coming years. One of them is lower future iron ore prices than we enjoy today. This is one of the key reasons that BHP has worked so very hard to get to the very bottom end of the cost curve and to run an ever more reliable business, because we know that the competition in this market is going to heat up, and we want to make sure that we're fighting fit. We've done that through an internal focus on productivity, becoming ever better every day. That's what we need to see across the nation, because as we see falling iron ore prices, less government revenue as a result of that business, we need to be generating new opportunities, either new industries or new resources investments in other commodities. Unfortunately, in other commodities, we don't enjoy quite the same geological or geographic advantage that we enjoyed in iron ore, and therefore it's even more incumbent on us collectively, government, business, and others, to be as absolutely competitive relative to others around the world.
And you also flagged the sale of some of BHP's loss-making Queensland coal mines, which were for decades considered some of the finest metallurgical coal mines in the world, and they were a mainstay of BHP's earnings. But you also said that there was an effective 67% tax rate with Queensland royalties included. So ultimately, what went wrong? Was it the royalties alone?
Well, so what we announced with results, or what I said during results, Ross, is that we've got relatively low coal prices currently. And in the face of that, there will be certain parts of certain coal mines that we have in Queensland that aren't generating a margin. And it used to be when you would take some of the downside in the hopes of being able to capitalize on the upside when prices rose again. With the new royalty scheme that was put in place in Queensland, they've essentially taken a good part of that upside. And so what you get left with is the downside. And as a business, of course, we need to be focused on stemming those losses as quickly as possible when they arise. And if we saw certain parts of our mines up there that were losing money, we'll have to move quickly, including looking at shutting in that production, at least for a period of time. And yes, the royalty regime in Queensland has made a big difference here. It's made Queensland unattractive for investment because of both the risk and the costs in our sector. And then in terms of the way that we operate our business, it's changed the economics of these operations and may lead to different decision making and decisions that see quicker action in terms of curtailing production when certain parts of that production are loss making. And of course, that unfortunately then has flow on impacts in terms of local businesses and jobs and so on.
And just a final one for you. This week, you also said BHP in future will lift the amount of debt it carries from $5 to $15 billion that's currently to between $10 and $20 billion US. What I wonder is whether this is BHP management trying to juice up the share price growth at the expense of future dividends.
No, not at all, Ross. In fact, we have a sacrosanct 50% minimum payout ratio. This period, we paid out at 60%. But what we're seeking to do here is well, number one, we review this net debt range on a regular basis, and it's of course, there's judgment exercised in it, but it is financially and analytically driven. And given the nature of our portfolio, our growing position in copper in Chile, for example, soon to have a large position in potash in Canada, that's giving us greater resilience and therefore more ability to carry a slightly higher debt level, which is still conservative by industry standards. And through doing that, we're going to be able to invest in more of these growth projects that we have in Canada, Chile, US, Argentina, and I really do hope in Australia as well, because that's what will underpin future earnings growth or dividend growth for shareholders.
Mike Henry, it's always good to catch up with you. I appreciate your time today.
Thank you.